The Banking Association of South Africa has commissioned a report which seeks to get to the bottom of why it is financial institutions have not lived up to expectations in terms of providing funding to the SMME sector. The report has concluded that there has been no meaningful improvement in access to finance for small businesses, with banks not having been able to meet the SMME funding targets as set out in the financial sector codes in 2018, for example. Well, to find out the reasons why and what innovative ways the sector could use in order to play a better role in giving SMEs a head start, I'm joined in studio by Septi Bukula. He's a director at Osiba Analytics. Thanks very much for joining us, sir.
Yeah, thanks for having me.
Good stuff. So essentially, what were the key findings of this BASA report as to why the financial sector doesn't seem able to meet SMEs at the point of their financial need?
Well, I think, it's good to just give a bit of a background. This was a follow-up study to one that was conducted in 2010. And it had found a number of reasons that were internal, some were internal to the financial institutions, and some, of course, related to the market. That means SMMEs. That made it difficult for financial institutions to engage with SMEs. And I think that, what we need to emphasize is that the challenges are really at many different levels. And I think that the financial institutions acknowledge that, for instance, just to give an example, some of their credit scoring tools and approaches are not really relevant to the small business sector. They use credit scoring tools that really apply to bigger operators which have a lot of information available. So that's one of the things. And then they, look at, for instance, things like the need to really upskill their staff in terms of better understanding the SMME market, because one cannot approach the SMME market as a smaller size of a large corporate. You really have to understand the dynamics of that market. You need to understand the nuances. So I think within the banks, there has been recognition that there's a need for a shift to be made. But certainly outside of the banks as well, on what we call the demand side, that is the side of the SMME, there's a number of issues there that really needs to be, dealt with. Some are just capacity issues on the part of SMMEs, capacity in terms of financial information, and some are behavioral issues. Like, for instance, when you go to a financial institution, you apply for finance, you get the finance, and then you misapply the finance. You don't apply it for the purpose for which you had applied for. So, and then, of course, there are external factors to both these parties, like, the impact of regulation. Financial institutions complain a lot about what they see as a negative impact, for instance, of the National Credit Act. Yes. So that's why I'm saying the challenges are at many different layers, different levels. Sorry.
Let's focus a little bit on the National Credit Act. The National Credit Act is actually there to try and protect the consumer, from rogue financial lenders. But perhaps maybe it's also then overzealous in terms of what financial institutions are able to do to help SMEs. Just explain and break down what the issues are there.
Well, I need to start off by saying, by the way, that the National Credit Regulator will argue that there's absolutely nothing wrong with the National Credit Act in terms of negative impact on SME lending. But here's the issue. The National Credit Act governs consumer lending. And that is, I think, actually goes to the threshold of about R1 million. And it tries to avoid the challenges of making people over-indebted through reckless lending. So it's a very noble objective, because we have a problem of over-indebtedness in the country. The challenge, though, is that the largest majority, we presented our report this morning, when you add up, it's up to 75% of the SMEs who seek funding are actually in that bracket. So they are then analyzed by financial institutions as though it was just an individual applying. And therefore, the National Credit Act applies. And that is where it becomes a blockage. Now, some people argue that it is actually a misapplication of the National Credit Act by financial institutions. So there's this raging debate, which in my view is not helpful. What is helpful is for the two parties to come together and the National Credit Regulator or the people who promulgated the Act to say, look, it was not our intention to make lending or financing of SMEs more difficult. We were trying to protect consumers. How can we work together with you as the financiers to fix this? And also, I think that there's an argument also that's being made that no, but financial institutions really do have a way of working, not working around the Act, of working within the Act, but still achieving a goal of higher financing of SMEs. So some people are saying, well, the financial institutions are just hiding behind the Act. So it doesn't help because it doesn't take us anywhere. What needs to happen is that we need to come together and say we recognize that there's a problem here. It may not have been intended when the Act was promulgated. So let's find a solution so that we unblock access to finance for SMEs.
Okay, that's one strand. But what other recommendations are being made around how the financial sector can better cater for the SME sector?
So, for instance, if you look at, as I said, some of the issues are really outside of, the financial institutions themselves. And here is an interesting one, which is recognized in the field of small business development. The perennial problem of late payment to small businesses. Remember that financial institutions will look at the cash flow of a small business in assessing a loan application. Do you have positive cash flows that you can use to service this facility over whatever period? Now, a lot of small businesses are facing a problem of late payment, whether it's by government or large corporates. And when we're doing this study, one of the things that really stunned us was when the bank said, if an SME comes to borrow money from us and is showing us as proof of their ability to pay a government contract, they say we just see red. We don't touch it at all. And I said, well, that's interesting. What's the problem? They said, because of the problem of late payment. Just to give you the scale of the problem, a study was done in 2017 comparing 11 countries, and South Africa was one of those countries. And it showed that by December 2017, South African SMEs collectively were owed a staggering 27 billion rand. Now, in a situation like that, no financier is going to venture happily into that situation.
Yes.
And of course, there are issues that, if you have a government contract, you can't cede that government contract as security because National Treasury will not allow that to happen. So the challenges are at many levels, as I keep repeating that point.
Indeed. Well, we're going to leave it there, Dr. Septi. Thank you very much for your time. That was Septi Bukula. He's a director at Osiba Analytics, just giving us a view on the SME sector and some of the challenges and possible solutions. Well, that's a wrap from us here on the On Point team.